Ladies and gentlemen, may I have your attention, please? Good evening.
Let's get it started in here.
Welcome home. You're listening to the best non-professional advice show on the planet, on your home for overnight low-back session. This is the Stock, Jock, and Roll Show on daytradingradio.com.
Yeah.
Money never sleeps, pal.
Trading stocks, futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time.
And good evening, everybody. It is 9 p.m. Eastern Time, and this is the Stock, Jock, and Roll Show. Not sure where to start tonight. Actually, this could be the shortest show in our history. We could pretty much sum this up in about 30 seconds. All major indexes are below the 50-day after today. Strength keeps getting sold into. I don't see no long setups. This is a good time just to be defensive and wait for better conditions. Can't even short here. We're oversold. So, that's the show. We'll see you next Wednesday night. Oh, just kidding. There's so much to cover tonight, I don't even know where to start. We'll start by welcome to Dallas. Mr. Big Tex here on the screen on the bottom left is prepared at the Texas State Fair for any newcomers that may be arriving with Ebola. And the Dallas Cowboys, breaking news. They have released new alternate uniforms for this upcoming Sunday game here at home. So let's bring Jeff on board and get started. Invitation to Jeff is sent. Good evening, Hoover, in the chat room. Anybody else in there tonight? Good evening to you. Okay. Jeff needs about 5 minutes. So let me just talk about some of the items that we will be discussing tonight. Let's just take a quick look at today's ES action. And for the most part, it was a trend down day. Breath was pretty much in the toilet all day. Once the declining stocks rose above that 2,000 level, which we've talked about in the past, it's basically just short. It's the same way when the advancing stocks, when they're above the 2,000 level, get long. So on the screen here, this marks the open at 9:30 Eastern Time or 8:30 Central, where I'm located here in Dallas, Texas, home of the first Ebola patient 0. But anyway, we opened up at 8:30 and proceeded immediately into a sell-off. breath was immediately negative above 1700 declining stocks. We kind of came down, to that kind of what Rockstar always refers to as that 950 reversal. We got a little bounce there, but then we hit a new low. We kind of bounced around, and then there was some thought people were, kind of oversold here. Maybe we get a bounce in this area, and no. So we broke the ATR here, but we couldn't continue. ATR broke down right here at 11 o'clock Central Time, and the trend continued pretty much down into near the close, where we got some short covering going into the close. So it was a very hard day getting long, and if you tried to scalp on the long side. The easier way was to short late this morning, when we could not recapture the open and move up. That was the clear short. It was definitely right here in this area if you weren't able to jump on it out of the gate. I was over in the bond room this morning, and I was looking along the bonds, and when I get Jeff on here, we'll have a discussion about the bonds. So let me look at some of the items that are scheduled to talk about tonight, because there's just a bunch of them, and I don't know where to start. First off, I understand RPM has a groupie. Very interesting. And we'll talk about Ebola. And one thing I wanted to discuss tonight is why you should ask your broker to route your orders through IEX. We're also going to look at drones. I understand Germany is now delivering by drones. They've beat the US. Take a look at Ford GM stock contest that Jeff and I have between each other. And we'll look at a simple trading system again tonight, which you could have actually employed today, right before the close of the bell. There is a trading system that indicated today, if you were to buy at the close and sell it tomorrow morning at the open, your odds are 70% chance that it will make money. We'll go over that little keep it simple trading system. We're going to look at a few other things here. Let me get over to my spreadsheet. The rise of Elo. If you haven't heard of Elo, you will be hearing of Elo. I got in the website today. Actually, got in over the weekend, but kind of got in today. Look around. I'll pull it up here on the screen now. It's elo.co and this is not the rage yet, but gaining some substantial momentum over the last week as a Facebook replacement. So we'll kind of talk about Elo a little bit later. We'll also go through and look at some of the charts of the day. Also look at Garmin. I have a new smartwatch, essentially, that I got yesterday. I picked up at Best Buy. It was a pre-order from Garmin. It's pretty interesting. Take a look at that. And if we have time, we'll go through a Halloween indicator. Although Halloween may have come early, starting today. So let me see if Jeff is ready. If not, I'll dive into the charts here. Pull the S&P 500 chart. Last Wednesday, when we were on the show, we had this green candle right here. And the close of this green candle on last Wednesday was at the S&P 500 of where's the close there? Basically 1998. And a lot of people got excited because we kind of had a little bit of a reversal, and we had said we're not out of the woods yet. That was a nice little reversal, but we're not out of the woods yet. We are still below the 8 and 21 day. Anytime you're below the 8 and 21 day, that's just time to be thinking defensive. And we also showed some breadth indicators. Let me pull up the breadth indicator that I always go to after the close, right here. And we said, well, we have been cautious ever since the 8 EMA closed under on the cumulative 4-week new high lows back here and the 12th of September, and said we got to get some improvement in that and get back above the 8 day and get some of these moving averages crossing back up. And Jeff is ready, so I'll resend him the email. Resent to him. And also, we talked about last week that Dr. Brett Steenbarger also had been showing us quite a few new breadth indicators, all of them also showing things rolling over, and even him saying that he is stepping out of the market with this breadth until there is improvement to the long side. And so far, that seems to be the case. But where do we go from here is, the next question. And we'll get to that shortly. But I've got joining Jeff. What's up, man?
What's up? I had a little housekeeping stuff I had to do. I apologize for my tardiness.
That is quite all right. As the housekeeping is you're cleaning out a new space so that I can relocate there and leave Ebola infected at Dallas, Texas?
Yes, you can. Can you see this?
I did. I see a sign hanging in the background. Hang on, I can force the camera over to it.
Is that backward? That thing looks backwards.
No, it's fine from my end.
Oh, okay.
I forced it up on the screen. The producers we got in the background working for us, they're helping us out now. But I forced it up on the screen. So what's it say? Go big or go home, because it's football. Dallas Cowboys.
That's right.
Yeah. So
the 3-1 Dallas Cowboys.
Yes.
Oh, I goofed it up.
I know you're quite proud of that now.
I am. I'm very proud of that.
I even left my my jersey running in the background here.
I see that.
82. Hey, there's something missing.
What, the monkey?
Well, the monkey's there, but this little guy is missing at the moment. Can you see him?
Oh.
Mr. Bull has decided to take a slight break, apparently.
Yeah, apparently the bull. See, I don't call them bears anymore. I call them bullfighters.
Ah.
Right.
Gotcha. Well, if you need Band-Aids after today, if you're in the market trying to go long, I've got Band-Aids too. So,
that's only a short-term cure, though, right?
That's right. It just covers the wound, and you gotta let it heal and then go long again. Which is why I said this market, our show tonight, could last about 30 seconds, because all moving averages are below the 50-day. And every rally seems to be sold into right now. But now we're back to being oversold, so you really can't necessarily go short here, but there's nothing setting up long, so what do you do? And I say you can only scalp or sit on your hands.
Or you could watch baseball.
Hey, that's right. And congratulations to the Kansas City Royals for pulling out apparently a great victory last night. I was in bed by like 10:30 last night and saw some of your tweets coming through when they were starting to make a comeback. And I thought, man, should I get out of bed and go look at this game? And I looked at the score, and it was still like 7-5 or 6-5. It still wasn't close. But when I see you starting to tweet, I know something's going on.
Right. You know what? And I've become a fan of not just I've become a fan of sports as much as a fan of teams, right? I love the Cowboys. I've said that, over and over again here. Obviously, we're both Cardinal fans when it comes to Major League Baseball. But, man, a game like last night was just – those guys were down like 3 times. And you thought, all right, they didn't get the run in from third base in the 8th inning. They're still down a run. You got 3 outs left, right?
Yeah.
And so you're thinking, all right, how often does this happen? 9th inning happens, they tie the game up. And they just wouldn't quit, right? And then when Perez hit that ball down the line in the 12th inning to win it for him, was that the winner? Yeah, I think it was.
I don't know. Actually, one of the places I started listening to your tweet was about Perez, and it must have been in the 8th or 9th inning when he woofed at like 3 strikes or something, and you were just like, that was awful.
That was the most horrible at-bat I've ever seen, I think. He was swinging. I mean, he could have probably qualified for the PGA Tour with the stuff that he was swinging at. Yeah.
It's pretty amazing. It speaks to the power of Twitter itself, of the people that I follow. I'm laying in bed and I can figure out what's going on in the world and, not even have to get up. And I knew something was going on there.
Right.
In the sports world.
Right. You don't even have to, you don't turn the TV on. You don't, you can pretty much know what's going on in the sports world, in the political world, and whatever part of the world, just by getting Twitter out or Facebook or whatever. Yeah. So, I mean, there's definitely a benefit to the social media aspect of life. I think it's good and bad both, but I think it's far more good than it is bad. And so I think that's pretty cool. And it's fun to be able to watch a game even if you're sitting by yourself, right?
Yes.
But you feel like you're watching the game with like 10,000 other people, and I think that's kind of cool.
I have to tell you something.
Uh-oh.
I screwed up today in the bonds.
Now, how did that happen?
Well, our bond system and
right. Moonraker, our proprietary bond trading system.
Yeah, well, we have rules in place, and you build systems basically to help with your discipline and your decision making, right, so that you don't,
screw up.
Yeah, I made a bad decision today in the bonds. I left about $500 on the table. Not good, my friend.
No, it's not good. It's going to happen, right?
No, I mean, it shouldn't. It happened. Let me tell you what happened. So I'm going to the All Things Bond room and looking at the logs this morning, and I'll go ahead and pull bonds up here in just a second. So this morning I came in at 7 o'clock because I am always in the All Things Bond room at 7 o'clock since the pin opens at 7:20 Central Time.
Right, absolutely.
Because what is it that I say? The early bond trader catches the worm. And I said right at 7 o'clock, looks like the bonds caught Ebola. Because last night, right after the close, when that Ebola news came out, bonds took a spike and equity started to sell off a little bit on that news, which made sense, fear. And when there's fear in the markets, they tend to move it out of stocks and into bonds. And of course, I think one of the things we're going to talk about at airlines. One of those fears today in the airlines was also, well, hey, will that fear translate into airlines because of Ebola? Will people stop flying because of the fear of getting Ebola?
Right.
So anyway, that Ebola news last night came into effect. And when I went to bed, I woke up this morning and bonds had moved like a full 1.5 points, which is huge for the bonds up higher. And so I said, well, the system does have, so I'm reading it, system will have a long bias this morning, but really hate this Ebola gap way down at 137.31. So we had a big gap up in bonds. And so when you go long on that big gap up, you always get a little nervous about it. And I also said that there was no POMO today. So that made me another bit of nervous that there was no POMO, meaning, well, we're already, opening up high here. We don't have POMO today to help us out. And so I went on and posted, my things and said there's no speakers or auctions today in the bonds. And I said I'm not going to take a bond position until after the first 5-minute candle completes, which is against the rule because the system takes it when the market opens. But
right at 7:20. Right.
I had that Ebola news in my head in fear that it was just news reaction overnight. This thing is going to just move back, fill the gap, and go about its way. Because how many times do we see what, Future Trader 71 says, things return to the scene of the crime? And so I said, as long as we open up above 130 at 11, system will be long. If not, if it opens up and stays below, system will be short. And I'm put in there, it's like rolling dice today, which again is a human emotion that I did not need to be adding to that element, but did. Because
so you broke one of the cardinal rules, essentially. Right?
Yes. So anyway, I did get in long based on the system. And I said, well, I'm long at 0.25 for a dice roll. Again, throwing out my bias. And I ended up selling it, I said, at 9:02, which was like an hour, about an hour after no, not an hour, about 50 minutes after the bond market opened. So I said, took off my ZB at 0.29 for +4. I just don't like this risk reward. It decided basically to cut off the system. Right after I did that, the market plummeted and the bonds just took off.
Right.
It took off after I got +4 points. And if I would have followed the system rules to close that out at the end of the day, and it was a trend day, I pretty much left about almost 20 ticks on the table, which is huge in bonds. So it
happens.
I screwed up today, man. I screwed up today. I overrode the system, and I have overrode the system at other times, especially this summer when we were kind of tweaking the system. I overrode it a few times, but most of the times it was, safe to override it, I guess, or it turned out okay. But today I basically let that Ebola news fear and that overnight gap really play into my head. And this is one of the struggles as traders, is these news items and the things that get into our head and our bias in our head when price action is actually what really matters. And the price action in the bonds and our system said long, and I did not listen to it. And so I left some money on the table. Now I was able to scalp out, some extra dollars over in the NQ today short, but nothing compared. If I would have held on to that long, I probably just sat back in my chair and just watched the market all day and did nothing. So
Right. But you're going to have days like that, though, right? I mean, you don't like them, but
no, I don't need to have days like that. I need to turn the system on and let the system run, no matter what the rules, unless there's something totally in the market that has transpired. But even so, even if I'm long, and then or say if I was even short this morning, and the Ebola news came out during the market hours and caused the issue, well, our system would have flipped long at some point, and I would have been even fine that way. So again, it's just that's why we trade systems, is to put them in for rules, stick to those rules, and you live and die with it. You got to keep my bias out of that bond system. Now,
Right.
I trade the bonds and scalp them in and out of my system, and sometimes I hedge against my system. But as far as the system goes, I screwed up. So anyway,
But I think that's a good teaching moment, though. I think that that's a good thing to to point out. Anybody that's out there listening, that you do want to have a system, you do want to follow it, and there are times where you're going to have a one-off situation where you do have to manually intervene with that. But it's tough. I mean, I think that backs up what we've talked about a lot, which is that you got to just grit your teeth and grin and bear it, right?
Yeah.
And walk away and go, I don't really like that, but you know what? And that is I think that's a good segue to what you were going to talk about. I think, Charlie, looking at the show plan about back testing, right? And if you develop a system that you trust, and you've back tested it, boy, it's hard to not jump in there, I think, and try and go, I don't like the way this is looking. But you have to develop a system you trust and just let it ride, essentially, right?
Correct. Yes. Once you have back tested the results and you have optimized it and then did forward walking and run it through simulator for a period of time, which I recommend at least 3 months. When you turn it on, that's it. You have to stick with it, because
set it and forget it.
All right. Well, later tonight we'll get to that segment, and I did want to go look at some of the charts today. But hey, today I did screw up in the bonds by bailing early, and that happens. But I will do my best to keep that from happening again.
It's like, if I can use one of our favorites, Mike Shannon, and say, you know what? There was only one guy that was perfect, and they nailed him to a tree. So.
Yeah. Yeah.
So you're never going to get it completely right, but.
So I'm gonna pull up some charts here and just start looking at some charts from the session today, and I'm going to start with the McClellan oscillator. And
you know what? I think this is a good point to jump in, and I don't know if everybody out there knows the difference between an indicator and an oscillator, right? So an indicator is just basically up and down, right?
Mm-hmm.
Oscillator, you have a midpoint. If you're, depending on which oscillator you use, you've got that middle line, and then you've got the over or under. Like stochastics. Good example of an oscillator, I think, right?
It's sort of like an oscillator, but it's really an indicator that's used, a lower steady indicator for the most part. But what I'm looking at here is the McClellan oscillator, and this isn't the actual version of McClellan oscillator. This is the TC2000 version of it, and TC2000 is our preferred charting system for equities that we utilize at StockJocknRoll. So I like to suggest, if you are looking for a charting system for equities, TC2000 does a great job at that. But at this, when you look at this, there's been some studies done on McClellan oscillator, and anytime McClellan oscillator gets to a minus 100, you essentially want to back up the truck and load it up with longs and basically buy everything, and then when it gets back to zero, you sell it. So minus 100 in a McClellan oscillator is roughly about minus 200 to 250 in this TC2000 version. So anytime this oscillator gets below negative 200, this is definitely not an area that you want to start shorting. Can we go lower? Yes, absolutely. We can go lower from here. But most times, studies have shown once we get to this oversold level, well, we're due for a bounce. Now, the funny thing about this, last Thursday and last Tuesday, we were also below this number. And this is where I talked about earlier on the show that these rallies just keep getting sold into at the moment. So any bounce that we have gotten since last Tuesday, Wednesday on our show, we had that bounce and we said, not out of the woods yet, and sold off the next day. We got a bounce, sold off, and then we got today, but we're back into this minus 200 level again, which means, we're probably due for, another bounce again, a reversal. So what you want to look for is if we do gap down in the morning and we reverse back through the open, you might want to jump on it for some longs to see if it is a bounce. It can always be a beginning of a reversal, but right now, since we're below the 50-day and all moving averages, and moving averages are starting to cross down, that you can really only say it's a bounce at the moment. So wanted to start with this chart to say we are kind of oversold here. So I wouldn't necessarily be looking for shorts, but I'm not necessarily looking for longs either. Cash can be a position. Waiting to let things set up can be a position. October can be sometimes good reversal months and good months overall. And at some point, we may get a reversal in October, which will end up carrying us into the rest of the fourth quarter into the Christmas. But right now, it's just it's just, I think, in my opinion, be a little patient right here for some swing longs.
Right. I think that looks like a possible scalp setup for a long. It looks like it's got some pretty good support there, right?
Yeah, this is an area that you don't want to short anything. So after today's big move down, we do need a little relief bounce. It seems like at this point. So I'm going to turn back over to the S&P 500, and actually, let me go to the SPY, because the SPY really clearly indicates today breaking a trend that went back quite some way on a daily chart. Matter of fact, this trend went back essentially to November 13th, which we've talked about this date many times on our show in the past, Jeff, that this was the day that we were in Las Vegas 2 years ago when the market
Right.
reversed, and that was the start of this current trend we were in. And in this daily trend, we've had several key reversals along the way. June 2013, key reversal. October 13, key reversal. February this year, key reversal. April this year, key reversal. Lastly, August the 8th, key reversal. And that trend line broke today. So I'm moving closer. And you can see these moving averages starting to curl down. So if we're looking for a bounce, you know, if we're looking for a bounce, the first test of a bounce can be back to this trend line and see how it handles. We've got a text on my wrist. This is kind of cool. Something we'll get to a little later in the show is my little smartwatch. And if we get a bounce, this is a good place to look for a bounce to. So that would bring us, back up to the 195, 196 level in SPY. So that's a first good test there. Now, when you go out a little farther, as far as the weekly uptrend and the monthly uptrend, you got your 401ks, you got your long-term investments. Still nothing that says get scared yet. But we certainly move in here a little closer. This week is not done yet, but I would not be surprised as long as we stay above the 40-week moving average in the weekly. I don't get too concerned for long-term holdings at the moment, but daily swing trade ideas seem to be a little stale at the moment. We go look at the Dow Jones. Actually, didn't you blame Alibaba on this whole thing, Jeff? What did you call them?
Alibaba and the 40 Thieves?
Yeah. Because the Dow is like 500. Hang on, I think like 500 points below the Alibaba IPO. Let me see. The Dow is down more than 500 points since the Alibaba IPO. And I saw a chart last week. Somebody tweeted a chart last week that showed Alibaba was the biggest IPO ever.
Right, yeah.
And there was the chart that they tweeted was showing the biggest IPO ever back in like 2001, which I think was Apple. I'm not sure if this was one, but it was a big one back in that time frame, which marked the top there. And then in 2008, there was another apparently IPO that was the biggest ever, and it marked the top. And so anyway, it was kind of interesting that, these big IPOs, have a tendency to mark some kind of, temporary top in action. But we are down in the Dow 500 points since then. I think I called it Alibaba the Hut or something like that, and you called it Alibaba and the Thieves. So we'll just blame Alibaba. Forget Ebola. That's the case. IWM, just absolutely ugly. This chart, the Russell 2000, just ugly. We got Golden Cross down here at the 50 over the 200. Everything, all moving averages moving down. There's nothing that says buy this thing yet. Big candle today is selling volume. Maybe that tends to be a little bit of exhaustion, and it is due for a bounce. But there's nothing saying swing long IWM in my mind here. The dollar absolutely ripping like crazy, which is great on energies because energies is in the tank. Lots of deflation fears again surfacing there. But hey, if you want to fill up your tank, it's getting cheaper. And I don't know if it's the dollar that's running so much because of QE, or if it's just because the yen and the euro has been crushed. I'm not sure which is driving which at the moment.
Well, it could be. That may be a combination of both of them, though, I guess.
I guess I tend to want to think it's somehow all going back to QE related stuff, but gold, still, even with the fear in Ebola, there wasn't anything that I really saw in gold today. It's below all major moving averages. I don't see anything. Our side did tune up just a little bit here, but
Well, I wonder how it's interesting how I think one thing to look at really is the interaction between gold and the bond market, right? Because you're basically putting cash in either one of them.
yeah,
right? And gold is more of a tangible asset.
yeah. And when there's fear and there's recession and money's coming out of equities, it tends to go into gold and bonds. It went into bonds today, and but it not seeing that flock to gold yet. It's sort of in that category. It seems like with energy at the moment, and deflation, it's kind of getting, and the dollar rising, it's kind of getting hit. It's kind of getting hit because of that pressure. It seems like.
Right. See, one thing about gold that I always wonder about is that it's definitely, obviously, a tangible asset, right? And it's something that you can buy and sell that's physical. But I don't know that gold is, we'd have to really get in a bad spot to the point where we were using gold as an asset from a monetary standpoint, I think.
Well, yeah. Well, we'd probably switch to Bitcoin before that.
Right, right.
And I think that's a long way off too.
Right.
For
right.
the average person anyway, to be using Bitcoin. But yeah, can you imagine trading gold at the down at the grocery store? I'm gonna
Well,
give you some gold for those eggs, please.
That's going back to like medieval times, though, right?
Yes.
You're gonna melt it down and take it to the grocery store. What are they gonna? Are we gonna build like scales that are gonna measure the amount of gold you bring in there?
Mm-hmm.
And that's how we're gonna transact? Yeah, I don't think so.
The Dow Jones Transportation Index (IYT) also rolled out of bed, and all the airlines definitely got hit. One of the reasons being also from the Ebola fears.
Yeah, I had put that. I put that in the show plan. I don't know if you had seen that or not, but yeah, all of them were down, pretty much. I don't know if that's like a SARS type fear.
Yeah, remember that SARS back several years ago that was in Asia. I think that's where that came from, and boy, that caused a hit in the airline stocks.
Well, they had a big issue with that in Toronto too. But I don't know if I think that there's just that psychological thing. I'm in a metal tube with people that are breathing the same air I am, and potentially they think that I guess the Ebola could be spread to them.
Yeah, pretty much going through here, all the airlines is pretty much.
What is that? Now I can't remember this now, which I should remember this. What is we've got an airline index, right?
Yeah. Well, no, it's.
What is that? IT. I thought there was like an
IYT. It's not an airline index. It's a transportation index. So it includes all things transportation, including rail and FedEx and.
Right.
But it does include it includes most of the legacy airlines in it. I don't know if it includes things like Spirit and Frontier or anything probably, but
They took a pretty good hit today, though.
Oh yeah, no, airlines got popped, but overall the transportation index also got popped. Pretty much across the board today. Just go to FinViz and look at the map, and you'll see. Let me pull that FinViz map. See, let's just go see what was green today, if we had anything green, and if it was probably people just moving stuff to dividend stocks or something for some potential protection here. Let's see maps.
Yeah, I just pulled the index up on Yahoo.
So pretty much everything is red here except, oh look, utilities. Which is pretty much a play in safety going to utilities and dividend type stocks. Biotech still had some good things. Biotech has just been on fire. But pretty much everything else is dead red today.
Yeah. Yeah, the SMA and the 20 and 50 got nailed on transportation.
Apple is one I'm still holding on to, and
yeah, Hoover asked about that.
Did he?
Hoover asked about Apple and
right.
VZ.
Well, let's go look at Apple because I'm holding some Apple, and I almost got out of this thing last week when it closed below the 50-day, and I was planning on getting out of Apple the next morning, but we had a big old gap up, which put us back inside this trend line, so I didn't cut it loose, and then it got back above the 8 and 21 day yesterday, and thought maybe there's some upside that maybe Apple can go for a break of this trend line, but then it got hit today with everything else, down basically 1.5%, and it closed today right below that 50-day. It's still just hanging onto that trend line. So I'm not cutting loose my Apple yet, but
did you say we had a gap up or an app up?
Well, I could have said app up. That's entirely possible. But if I did, it was meant to be a gap up.
I didn't know. I was just trying to clarify.
So Apple is is teetering here, and it doesn't look like it's going to hold. But maybe if we can get that bounce, tomorrow, maybe maybe Apple can survive another day or two. But it seems as though I'm going to be bailing on my Apple here, but we'll see what happens if we close below that trend line a second time. What was the other one that Hoover wanted to look at?
When the left-handed iPhone comes out, they're going to shoot the moon.
Let's see.
I've been saying that forever. Yeah, Verizon.
Yeah, all right, VZ. So, all right, so this is a daily chart on Verizon. It's down 1% today.
They had a pretty good gap up though too there.
Well, they did.
But
it looks like it reversed on it. Let's see here.
Right.
No, it actually gapped down. It gapped down, and then it came back to basically almost close the gap, and then it sold off with the rest of the market at about that same time. So even Verizon couldn't hang on today. As far as the setup in Verizon, it doesn't necessarily say to go short, but today puts it precarious with a close below the 8 and 21 day. And
that looks choppy to me.
It has definitely has been. It's kind of been in this range now for a couple months. It looks like back to August between 48.50 and 50.50. And so there's nothing that says cut it loose yet, but we're close to getting a MACD pushed down. We had some volume today. There's nothing that says cut it loose, and there's really nothing that says go long Verizon here. So
Right.
anything you gotta, if you're holding it and you're long, you do have to be defensive because it's below the 821 and below the 50-day, but we're above the 120 and we're below the 200. So that's Verizon. And somebody Orlando, what's the gold MA? What's the gold MA? So I guess he's referring to gold. I think we looked at gold. Gold at least was up today. Up, had a little bit of volume. Yeah, we get a close tomorrow above that 8-day. Gold, might be interesting for a bounce back to this trend line that you might be able to get some kind of bounce play back here to the 21-day towards this trend line right in here, but nothing screaming buy. Let's go look at Nugget. Nugget got a little bit of a bounce today. Looks like it's below a key support again, same way as the gold. Can get back above this resistance here, get back above the 8-day. Maybe it can run and play a bounce back into this towards this zone, but nothing that says buy to me here. So I mean, I got nothing long, I got nothing short. I got a whole lot of nothing right now. But we do have something to look forward to that could change things. And as always, we got jobs numbers this week. And it's a pretty big number that we got coming out on Friday. Let me pull this up here.
Now that I haven't had a chance to look at that.
Let me see here. All right, so September jobs report on Friday. If you recall, last month we had the payroll
came out for last month,
and it disappointed. It was was below expectations. So what they want to see is they don't want to see a second month of below expectations on that report. So if we can get a good jobs report, that might help, fuel a little bit of action on Friday into next week if we can get a bounce potentially going. So that's something to look for on Friday, is this jobs report. Now, if we get 2 months, of weak results, that could be an issue as well. But
I think that will be an issue.
Well, when we lost in August, that was like we had 6 straight months of winning streak in jobs. And when they reported last month in September for August, that broke the streak. So you don't want to do it 2 times in a row, because that may establish a new trend of some sort in the minds that we're not adding jobs at the pace that we were. So that's another big thing to look forward to on Friday. So we could, we get a bang up number. Hey, maybe it will help bounce this market, and then again, we get a second one. Who knows what might happen? All right.
What else do we have?
Well, I wanted to talk briefly about your broker. And if you have a broker, you may be interested in calling your broker in the next couple of days and asking your broker a very simple question. And that question would be, ask your broker if they sell your orders to internalizers that are looking at your, your orders, your buy sells, and if they are, ask them to route it to IEX instead. And if they have the ability to go to IEX, your broker has to comply and do that. And now let me talk a little bit about what IEX is.
Well, I'm gonna ask you this real quick too, Charlie. What exactly is, for everybody out there, what is an internalizer?
An internalizer are basically people who can see they're selling your bid, your buy offer, your sell offer that you put out there. They're selling it to other firms to be able to see that offer. Right. So if your broker is selling all that information to an internalizer who's buying that information, they essentially can get a little bit of what I'll say an unfair advantage of what's going on in the marketplace that you aren't getting that advantage to seeing.
Right. So they know what you're buying or what you're selling, and they can leverage that essentially.
Right. And I saw this news a few weeks ago, and I'll put this over on the show. TradeStation became one of the first self-directed U.S. retail brokers to route orders directly to IEX. And so I called TradeStation and said, all right then, since you can do it, route me through IEX. I no longer want my orders going through anybody else. And
right.
So I'm going to pull up this IEX now and just talk about it for a second and then play a little video. But what IEX is essentially is it is a new way that is putting orders into the market that is not selling it to people who can see it. And so their mission here, let me put it out here, how we operate. The IEX ATS is a fully automated electronic order book for orders to buy and sell national market systems, securities, equities on an automated function. And all orders are basically placed and not shown to any other broker affiliates. So it's basically helping bring fairness into the marketplace.
Right.
And it's kind of a new trend. I know the CME just a few weeks ago instituted a new rule on spoofing to try to keep people from spoofing their buys and alerts. And part of that spoofing the buys and alerts is because it can be seen, and it's basically they're saying I want to buy all this at this level, and then they actually pull it right before it happens. So they're basically spoofing,
manipulating. It's market manipulation, basically.
Right. Absolutely. So this new marketplace helps define some of the fairness to that. And so if you don't want anybody seeing your orders and your broker can route to IEX, you can ask your broker to do so, and they must comply to that. So that's my recommendation, is to contact your broker, ask them if they have IEX, and if so, to go ahead and change that. So I'm going to play a little video here. It is about 3 minutes long, which explains a whole lot better about IEX than what I ever could do it justice. And so we'll play this and be right back in about 3 minutes.
Why does the stock market exist? Well, for one, it's for companies to raise capital through the issuance of stock to investors. And secondly, it's to allow those investors to buy and sell shares with each other in a fair and efficient way. But in today's market, with 13 registered exchanges, over 40 dark pools, and a long list of broker algorithms, the marketplace has become overly complex, and real investors are getting farther and farther away from trading with each other. This complexity has enabled a new form of computerized trading to dominate the market, now accounting for over half of all trading volume. It's broadly referred to as high-frequency trading, a term that isn't well defined and lumps together HFT strategies that provide a service to the investor with those that harm the investor, which can be defined as predatory trading. Industry sources estimate that these strategies earn billions of dollars each year. This new market environment has made it harder for traditional investors to confidently execute trades. This is especially true for institutional investors, who represent the savings and retirement accounts of the everyday person. Since these institutions invest the pooled assets of the general public, their order sizes tend to be large, which makes for a much larger signal to the predatory strategies. To best protect their orders, investors would like to trade in a market that allows them to 1. Access as much liquidity as possible, and 2. Avoid signaling the predatory strategies. Brokers and exchanges have tried for years to create new markets to help investors, but with each entity creating their own separate solution, there are now over 50 markets trying to solve the same problem. Unfortunately, this has only made things worse for investors by making it harder to find liquidity and increasing the likelihood of signaling a predatory strategy. An obvious solution would be for investors and brokers to choose to trade in the same market, but with nearly every market being owned by a different broker or group of brokers who all compete with each other, there's never been a unanimous choice for brokers or investors to make. Until now. IEX is a marketplace owned exclusively by a consortium of mutual funds, hedge funds, family offices, and individuals. IEX will use patent-pending technology to protect orders from predatory trading, making it a practical choice for brokers and investors to send orders. And although IEX does not have broker owners, we're limiting our subscribers to only brokers as trading participants. This unique separation of owners and subscribers is truly different from what exists in the marketplace today and allows IEX to balance the interests of brokers, investors, and the market. And best of all, as more investors and brokers go through the process of choosing IEX, the network effect increases the chance of them trading directly with each other while avoiding predatory trading. It's IEX's vision to restore investor confidence by helping return the stock market to its true purpose, uphold just and equitable principles of trade, remove impediments to a free and open market, protect the investor and public interest, facilitate an opportunity for investor orders to meet directly. IEX, a market that works for investors.
So there was the turn this off. That was a video on IEX. I see Lock and Profit asked a question about TD Ameritrade, if they can use IEX, and I don't know, Lock and Profit. I'm looking at IEX website, and they do list currently. There's a list of brokers that can trade through them, and so, for example, the top ones right now: Interactive Brokers, Lightspeed, TradeStation, all have access to them. And then there's a whole bunch of others, institutional brokers that have access to them as well. And so you'd have to check the website to see if your broker is on there. But it looks like in the retail space, it looks like it's TradeStation, Lightspeed, and Interactive Brokers right now that currently has IEX as a platform that you can route your orders through. So my suggestion is, if you are on one of those retail brokers, to call them and ask them to route your orders to IEX, so we can have more fair play. So us little guys here every day doing what we do can have a little bit bigger chance against those institutions.
Charlie, did you see lock-in profits question in the chat room?
I did, and I just answered it for him.
Oh, okay, that's what you were talking about.
Yeah,
All right.
I don't see TD Ameritrade. He was asking about toss. I don't see TD Ameritrade on the on the list. I'm gonna put TD Ameritrade in Google and IEX and see if I get anything that pops up. Like if there's something that they're looking for. You know, somebody like TD Ameritrade who has one of the highest commissions of all brokers and sells this information readily. You know, they're not looking to help the little guy as much as a lot of people would think that they are for giving them all that free software. But TD Ameritrade, I don't see anything that stands out to see if there's anything coming from TD Ameritrade. I don't see anything. I may actually try to give them a call this week and ask, because I do have a TD Ameritrade account, not really actively trading it or anything, but maybe if I call, they can give me an answer if there's a timetable of, you know, with them. Hang on, there's something for. Here's an article from April 4th. Pay for order sinks E-Trade TD Ameritrade. Let's see here. Online brokers are getting hammered again as the market focuses on the practice of getting paid for order flow in the aftermath of the Michael Lewis Flash Boys. And don't see anything that talks about when they may get that pay for order. Anyway, it looks like TD Ameritrade and like E-Trade are some of the problems for that. At least somebody like Interactive Brokers and TradeStation have gone the right way to help the retail industry. So hopefully TD Ameritrade will feel pressure, especially if they get enough people calling them about it, to at least be able to offer it if you prefer to be routed through IEX. So I don't know.
So so let's talk about this for a minute. Like IEX as opposed to the Robinhood thing. Where are the differences there?
Well, IEX is not a broker. IEX is basically a software platform, an exchange that they can route orders through into the exchange. Robinhood is the broker. So since Robinhood has zero commissions, I doubt they're probably going to be, you know, in such a small organization, they're going to have things in place to throw orders over to IEX yet or anything like that. But
right,
it has to be the broker has to create the relationship with IEX and allow orders from that broker to be sent through them. So somebody like TD Ameritrade, who's a broker, is not does not allow orders to be sent through IEX yet. Where somebody like TradeStation Interactive Brokers is. If that is your broker, they have connections available that will allow it to go through IEX. So that maybe explains the difference between the broker and the IEX relationship. The broker is really the third party between us and the exchange.
Right.
So I want to buy at X dollars. The broker is that middleman that says, okay, got it. I know you want to buy it here. I'll run it through an exchange and put it out there and see if I can sell it. So if you choose TD Ameritrade as that broker, they are throwing it out on exchange for, you know, for however they have it set up. And so maybe that should explain the difference.
Right. That makes sense.
A little bit more clear. So,
so what? Oh, dang it! I think I just closed my.
There was did you hear about the Germany and drone deliveries? They've actually beat U.S. to the game.
Yeah, I saw that you had listed that, but I hadn't seen anything about that.
Yep. U.S. is lagging once again, probably thanks to our FAA, keeping us keeping us down. But let me pull it up here. You know, the whole question is, will this ever happen? And you and I have kept banging the table. It will happen. It will happen. Give it time. It will happen. And, you know, a lot of people have been saying, nah, it's never going to happen. Nah, no way. There's no way will a pizza ever be delivered to my house. Wrong. It's probably going to happen. I don't know how long. It might be 5 years. It might be 10 years. But it's going to happen. So, anyway.
So Germany's actually doing this now.
It's not Germany itself, but the company DHL. They are going to begin deliveries in Germany. And what they're doing is they built a drone that is going to drop off, basically, it's going to drop off some medicines and things to very sparsely populated islands on the northwestern coast of Germany that are out there. And so instead of paying it to be put on a ferry and sent over,
they're going to just fly it.
They're going to drone it over and drop it off at a DHL office that's set up there. And so it's amazing. It's great. The drone, the flight from the mainland to the island takes about 30 minutes, they said. And basically the big thing, it will be able to do any packages, I think, less than 4 pounds. I think that's what I recall reading. And the drone will hover about 100 feet off the ground. It will reach speeds up to 40 miles per hour. So
that's fascinating to me.
It is, isn't it? It is absolutely fascinating. It is. I got my drone sitting right back here on my little launch pad. Right here's my drone.
Well, we did. The Stock Jock and Roll show did.
That's right. The live drone. So here's
live drone. Yes.
Here's my drone. At some point, we're going to be delivering stocks. So while we're fighting with the FAA here on how that's going to happen between Amazon and Google building their drones and things, eventually it's going to happen.
So that's our fallback. That's our fallback plan.
Yes.
In the event that the trading doesn't work, we're going to deliver pizzas.
That's right, by drone.
Drone.
I'm going to be sitting at the Papa John's headquarters, flying a drone to your house. What does Peyton say about Papa John's? I forget what his little saying is.
Yeah, I can't remember that either.
Papa or done Papa? I forget. He's got a little saving.
That's the way we hedge our trades, folks. In the event they go bad, Charlie flies a drone out to deliver pizzas.
That's right. Yeah, we don't have regulatory approval, but stop our drone. Anyway, I wanted to bring that up because a lot of people, scuff off the drone thing, but it's happening. It's starting, and there's an area, and it makes full sense of why DHL would send something to an island off the coast of Germany that's if you can drone it there, why not? It's going to be shipping on a ferry over there.
Right. The logistics of that makes sense.
Right, and to be.
I'm trying to figure out how that works, though.
Yeah.
It just seems. I don't know. That seems odd to me.
Yeah, let's see here if there's a picture of the drone. Yeah, here we go. Here's a drone delivery. Oh, there's actually a video here. I'm going to play it. So hold on a second. This is cool.
All right.
It goes to an ad, so I'm going to play it. It's only like 1:47 seconds. And it may even be in German, the way this is, but it is DHL. So I'm going to give this a quick roll here.
Das ganz Besondere an diesem Projekt
That
ist,
is
dass
awesome,
es
man.
ein Fliegen außerhalb der menschlichen Sichtweite eines Steuerers ist. Das ist etwas, was es in dieser Form in Europa noch nicht gegeben hat.
That is so freaking awesome.
How do you do that?
Oh man. There it is. There's the drone delivery. Holy crap.
Was wir mit diesem Anwendungsfall jetzt zeigen wollen, ist eben, dass es möglich ist, mit dieser Technologie schwer erreichbare Gebiete mit dem Paketcopter zu erreichen und ebenso auch das Thema Notfallversorgung, zum Beispiel eilige Arzneimittel, eben auch sicherzustellen. Wir von DHL sind grundsätzlich natürlich daran interessiert, Grundversorgung zu betreiben. Wir wollen alle Menschen in Deutschland erreichen können und je schneller wir das können, desto besser.
That is so awesome. Oh man. I'll post this link in the room in case anybody wants to see that drone video. Question in the room from Spaghetti is, how does a drone collect a signature for a package? Well, if it's dropping off a pizza, that might be a little hard. But in this particular case, there's a DHL representative over on the island that's picking up the package being dropped off by the drone. And then so I guess that DHL representative is getting the medicine to the place who would actually sign for the package.
But how do they sign for that, though?
Well, a DHL representative is going to pick it up from the drone, and the DHL representative get it to its location that it's needed on that island.
Okay, I got
For
you.
that case.
I got you.
Yeah. Now,
Right.
yeah, if they're dropping off a pizza at our house, maybe you won't have to sign for it because you can sign over the computer. But wouldn't it be cool? Hey, free delivery if you want to take the long route and it's 50 minutes, or hell, we can have that pizza to you in 10 minutes for a charge of an additional $9.95. Hell yeah, $9.95. Get that pizza to me, man.
What happens if somebody kidnaps the drone, though, and reprograms it?
That's true. Well, that's one of my fears with me learning my drone. It's so small and it can get out of hand so quickly that I've crashed it in the house, but I'm afraid to get it outside yet because I don't have the space. It'll be over in the neighbor's pool before I know it.
Spaghetti's gonna shoot down all the Pizza Hut drones.
Yeah, well, if you can time it just right, it's like a duck, and then send out your dog to go retrieve the pizza.
You got food for a week.
That's right. Oh, all right. Well, we got that topic off the air, but I read that this last week and thought that was pretty cool that DHL is starting deliveries of drones. It's coming. 5-10 years, there'll be some drone deliveries of some sort.
That is pretty cool.
Yes, it is.
And we talked about the airlines and the Ebola stuff, and basically that's the similar to the SARS stuff way back when. I put you wanted to look at the Garmin chart and VivoSmart.
Yeah.
Right.
Yes, I picked up a new smartwatch, one that was just introduced a couple weeks ago that a lot of people haven't heard about, and it's by Garmin. It's called the VivoSmart, and I have it on my wrist now. Let's see if I can flip it on here. There it is. Probably kind of hard to see with this this camera.
No, I can see it fine.
Can you? Well.
Yeah.
It's
So what does that do? Because it looks a little bit like a black Livestrong
that's
bracelet,
essentially
right?
what it is. Okay, so it is. Let me put this on here. It is basically it's a bracelet, and it is a combination of a health band and a smartwatch. And I can get my text through here. I can get my phone. If I'm out jogging and I'm playing music, I can control my music device on my phone. I can see what song's playing. I can see all my fitness goals. I connect it to the Garmin app. It's absolutely fantastic. Now the display, let's see here if I can put it up to the camera. Maybe I should just take it off. The display is that OLED. I'm not exactly sure what it is, but it's some of the stuff that Samsung uses. This display is not as good as the Samsung Gear Fit watch, but the band is very small, and it's kind of unintrusive, and it's cool because I had it on in bed with me last night when you tweeted about that Kansas City game, and when I get a tweet from it, from you, it'll vibrate too. It vibrates, and I can know to go look at it, and I can see what it is. Or if a phone comes in, or if I get a message from Facebook, you can program anything you want essentially to go to your phone,
right?
Or go to this bracelet. And anyway, right now it's only available exclusively at Best Buy because it just came out. I had to pre-order it. I picked it up yesterday through here. Maybe I'll throw this on here. This was just out 2 days ago. Garmin Vivo Smart Review, part activity tracker, part smartwatch, all awesome. But I found this one to be the best combination that to date of a smartwatch and a fitness band that I liked. And I did not want to wait any longer, so I jumped on this one. And so far, it's I've only had it a couple days. I really like it. I don't think it's the end product or it's exactly what I want yet. I think actually Samsung Gear Fit is probably the closest to what I like, but it's still a bigger unit. It's a little bit more, and I think the next version that Samsung comes out will probably slim it up some because I think their display is better and it works probably better with my Galaxy Note phone. But so far, this Vivo Smart that just came out is fantastic. I love it. And here's like a little video on somebody where you're getting your messages and what's going on. And it's got this little move indicator. When I found this, it was great during the trading day the last couple of days. If I sit idle too long, this indicator recognizes, hey, dude, get off your ass, essentially. And it will vibrate on my wrist, and it comes across these letters that says move, And so both times that's happened, if I was able to get up, I went and took just, a little bit of walk, just kind of move around. Or actually, you could get up and do some jumping jacks or get up and do some push-ups or something. But this Vivo Smart is pretty good. Let me see if I can play the little Vivo Smart video from Garmin, and then we'll go look at their chart, because Garmin is a stock that when we looked at it this last spring, it kind of surprised us how well the Garmin chart.
They were doing pretty well.
So I haven't really looked at it, but I wanted to take a look at it after getting this, because if this is the a big seller, it really should help them out. So let me just see here. Vivo Smart Garmin.
See, I think I am going to go check the Samsung band out.
Yes, I really wanted that Samsung band. It was just still a little bit too bulky for me. This one also is completely waterproof, so I can wear it 24/7. I can wear it in the shower.
Right.
I can swim in it, and it it tracks all that activity. And that was another thing I liked it over the Samsung one, where the Samsung one, the Gear, was just water resistant. This one, literally, I can wear it 24/7. I do not have to take off this watch. So I'm going to play a little video here from Garmin. It's only about
That's almost like we're in one of those ankle bracelets, right?
So that was the quick video from Garmin. Yeah, it is kind of like an ankle bracelet. I've never had to wear one of those, fortunately.
I've never had to either.
But yeah, it would probably fit around my ankle. But it's pretty nice, and it's got my time on it. It's got the dates, so I don't need my watch anymore. Anyway, it's pretty clever. I like it so far. And
I do. You know what? I wasn't big on the wearable technology stuff initially, but you know what? I think I'm coming around on that.
Well, the thing I think I like about getting text messages on my wrist and stuff is when I'm driving, and getting messages that I can just see it on my wrist and visually see it. I don't have to reply to it right away, but I see it come in.
Now, what's a capability? Like, does that have, like, can you do voice texting on that thing?
No, you can't do like voice texting on it.
Like, you're not like Maxwell Smart?
No, hasn't got to that level.
You can't put it up to your, you can't just talk into it.
Not yet. We're not there yet. But I can get my text on it now. Oh. All right, so I've got the Garmin chart up now, and I can tell you, yeah, it's been since last spring when we looked at this baby, when it had this big gap up in February, and I apparently haven't looked at it since, because it gapped up and ran, and there was like, well, there's, at this point I'm chasing this thing, so I just haven't gone back. Well, it's actually sold off a little bit here the last couple of months and is basically back down near this gap up level. So I'm going to keep my eyes on this baby. Maybe we can get a nice Santa Claus retail sales Christmas rally on Garmin at some point.
Right. You know what I'm wondering, and we've been in some businesses, Charlie, where we've had to look at this kind of stuff where I mean, pretty much everybody does. But as far as looking at competitors, I wonder how the Samsung, Samsung bringing out theirs, I wonder how all the competition has pretty much, kind of, like how they impacted that, right?
Yeah, and Apple introducing the iWatch a couple weeks ago.
Right.
That actually, I was pretty impressed with the Apple iWatch when it came out, but this thing is not even going to be released sometime in 2015, so I don't even know when it's going to be available. And so I don't have an Apple iPhone, so I'm not in that ecosystem, so I decided not to go that route, although I am impressed also with the iPhone 6 Plus for the first time in 2 years. Actually, we've been begging for more than 2 years for them to build a bigger size screen, and they finally did so, but it's too late for me to switch over there because I'm fully Android version, which is why I decided not to go with the iWatch. But I was impressed with what, as far as an actual watch goes. It seems like iWatch is probably going to be the top of the line. But now that that's out, and Samsung's had theirs for a couple of years, and there's the Moto X, the whole space will continue to just improve.
Right. Absolutely.
And I'll probably look back in 5 years from now, looking at the smart band that I have on now from Garmin, and go, what the hell was that? Because technology blows up so fast these days. But I finally, needed to, I've been wanting a smartwatch, and I've been wanting a fitness band, and this kind of gives me the best of both worlds. So
Right.
But the Garmin stock's been on a pullback. It's it's below all of its major moving averages, so it's not screaming buy. But there's a level here around 50 and a quarter that seems pretty important for it to hold on to. And I'm actually going to throw an alert on this line here to see if we get any type of cross on this line. I want to get a alert, and I'm going to draw a trend line going down and just extend that right.
That support though looks kind of good. I don't know what
it
timeline is that.
Now I'm looking at a daily chart. It looks pretty good. It's actually support right around the gap up back in February, where it had the nice run all the way up until July, and it's been sold off since July. So we're back down to this gap up level, and should be good support. Looks like we touched it once back here in September. We touched it again last week, and we're kind of coming down to it. It may break, and if it breaks, then we eventually will probably close this gap down here at 46, which I might just be all over it if we close this gap. So I've got at least a trend line alert. If it breaks this, I'll know, and then if it breaks this, I'll get some kind of alert. If it breaks this, then it means we've probably got these moving averages moving back up by then.
Right. That's kind of what I was looking at.
So I'll keep it on my chart. But Garmin, it was a stock that I actually thought last year that this stock would eventually go to. Well, I guess the last few years was one that I thought when they didn't come out with the smartphones and nobody was buying those, Garmin map things to go in your car when using smartphones, that Garmin would go out of business. But they've been able to recover quite a bit on the fitness side of things and keep things going for them.
Right. I think that's definitely something you watch. I think there's definitely a possibility there. And you know what? Along those lines, what I would wonder is, okay, so you've got Samsung, you got everybody else that's doing the smartphone thing, right? And that's going with Android and all that. So you have a multiple number of customers that are using the Android platform. But yet Apple is continuing to maintain their proprietary settings. Why do they not, why would they not branch out?
That's probably an RPM question there. It's all about their ecosystem and keeping everything tightly woven and
right
simple.
In-house.
But boy, if that iPhone watch, you could buy it for your Android phone and actually download an app. Yeah, I'd still be tempted to buy a watch. Maybe I wouldn't buy an iPhone, but I might be still tempted to buy that watch.
Right, and that's my point. I don't understand why they keep everything so much in-house. I feel like there's, from an investor standpoint, I feel like they have so much opportunity out there to blow that thing up, and they're not doing it. I don't know if that almost seems like an ego thing to me. Why would you not? I mean, there's so many products out there. You could, if you collaborate with Android, on some level or with somebody.
Well, even if not only just Android, Windows smartphones aren't big by any means with the next version. But if you were going to create something for an Android, you could create it for those that have Windows phones or.
Right. Exactly.
But yeah.
It just seems that's one of the things that has always kept me away from Apple, because they seem it feels to me like there's an ego issue there. Like, we're Apple, and they've got this closed off little stratosphere, hemisphere, however you want to define it, but they've got their own little niche, and we're Apple, and you know what? We're doing our own thing. And it just feels like there's other things that they could do to expand their product that they're not.
Well, and they'll sell you a $1,000 MacBook so that you can go surf the web.
Right.
That was just another dig at them. I would, anyway. I try not to dig them. I'm holding Apple stock, so.
I think they've been genius in some respects in the way that they've marketed the product and the way they've developed the product. But at the same time, I compare them to somebody like Southwest Airlines. right? Where they've developed this marketing and this product. Yeah, and it's great. Southwest has a great product.
Yeah, you actually hit it on the nail. It's all for them. Their marketing is so clever, and they have so many people bought onto it. And it's like back in the day when we grew up wearing a Nike swoosh shoe. You wanted a Nike swoosh shoe on your thing. You didn't want a brand from Kmart growing up.
Right.
To have that Apple emblem and whatever you have is also a part of their marketing. But like with Southwest Airlines, their whole premise is low fares. They drive low fares out there to the market, to the consumer. Every commercials, everything is delivered around. We deliver the lowest fares, and in time and studies that have also been shown, they aren't the lowest fare.
They don't. They're very rarely the lowest fare anymore.
It doesn't matter to the consumer because they've done such a great job of that marketing.
Right.
And have, like Apple, that it's, they've done a tremendous marketing job, and Apple has done that to a T. They've been great at it.
They have, and it's just like Southwest. I feel like I want to punch Southwest. I really do, and I feel like that with Apple. But at the same time, I will absolutely admit that I respect the way that they marketed their product and the way that they, they both have done a great job of that. Right. It pisses me off, but I can't not respect the fact that they've done an excellent job of that.
So when we come back, let's take a break and let's come back and see if we can do a back test. I actually hadn't come up with anything. So if Hoover or Play A09, Popeye, Dan Aruba, RPM, Orlandi, Spaghetti, anybody out there, here's what I need from you. We're going to do a moving average crossover back test. So what I need is a couple of things. Somebody toss out a couple moving averages that they like, whether they're SMAs or EMAs, and a time frame. And let's see if we can find something that these SMAs might actually work on to develop a automated strategy. So we're gonna take a music break, and we'll come back and we will begin to see if we can find something in an automated strategy that has something that we could move forward with. So Spaghetti threw out 89 period SMA. There's one. So
89? Where the hell does that come from?
Isn't that like the 7? There's like a 7 and 81 I've heard, or maybe it's 7 and 89. So hey, we'll go with it. Spaghetti's got 89. Is there a moving average with that you'd like to throw out? We got Dan saying 13 and 34.
Right.
I think I've heard of those being used before. I think I've also heard like 16 and 34. 13 and 34. So we got 13, 34, 89. We'll take a break. Anybody else pop on and mention a couple of EMAs and a time frame. We need a time frame to test. So we'll take a break, song break. We'll come back and we will play with seeing if we can make some money in finding a strategy. We are back. This is the Stock Jock and Roll Show. It is 9:47 Central Time. 10:47 for those in Atlanta and on the East Coast, like Jeff. So looking in our chat room, we had thrown out an 89 period SMA, a 13 EMA over 34. So I've decided we're going to take the 34 EMA, crossing over the 89 period SMA, and the time frame chosen is going to be 5 minutes. So we're going to see if we can actually come up with a profitable strategy based on the 34 and 89 moving average. So
You know what I'm gonna back test. A dice roll and a coin flip.
We did that last week with trend following. But you know, we can't.
But we didn't back test that though, did we?
But you know what? We could actually forward test that, because we can roll the dice live. So we could build a strategy that says we're going to roll the dice, and if it's like a 2 or 6, I'm going to go long. If it's anything else, I'm going to go short. And build a little risk management strategy. So maybe simply a 5-tick stop loss and a 10-tick target.
Right.
And roll the dice 25 times. And see if, so if you roll, we'll have to figure it out. I think we could do it.
I think we can too. I'll have to think about that. But I think
roll the dice and flip a coin, heads or tails.
Yeah, I think we can do it too.
Type of I think it's possible. So I've brought the NinjaTrader strategy analyzer onto the screen now, and
okay. All right.
NinjaTrader platform is the preferred platform for StockJocknRoll. It is, without a shadow of a doubt, the best platform in my mind, followed by TradeStation, to use. And the reason these two stations, or these two platforms that I recommend, is because of the backtesting capabilities. If you've got no idea what you're trading and you're just out, you know, hey, let's get long here, let's get short here on this moving average crossover or whatever setup you're using, and you don't have it tested to even determine if you think you have an edge, you're wasting your time. So
you've got to know. And I would agree. I would absolutely agree with what Charlie said. Number one, number two. TradeStation is, NinjaTrader is great. That's great stuff.
It's so unbelievably powerful when I run these back tests, and the way it actually gathers all that data and presents the results is so lightning fast. It's great. So we're going to create a new strategy, and we're going to call this one the 34 versus 89.
I'll stop you just for a minute, Charlie.
Yeah, go ahead.
Okay, so you went. So where did you start off with going through that? Because I know where you went, but for anybody out there.
Okay, so in NinjaTrader, I opened up what is known as the strategy analyzer, and I'm going to build a strategy essentially that goes long on a crossover of a 34 EMA over 89 period SMA on a 5-minute chart. And we're going to test a few products in the equities and bonds to see if we get anything of significance that says, hey, there's something that may appear that we have an edge. Can we continue to work on this strategy?
Right.
And it's amazing in this market how long strategies, almost all long strategies, have been working now for the last 4 or 5 years. So it's certainly a strategy you want to, when you do get ready to completely test it, you want to test it back past 2008. My recommendation is back towards 2004, so you can take in some of the good and with some of the bad for the edge. But certainly, testing something in the last 3 years is definitely relevant. So I'm building a new strategy here.
You got to have, as a stats guy and a forecasting guy, you've got to have sample size. So I would absolutely agree with what Charlie just said.
So I can't name it the 3489. So let's just call this live demo name.
Live and in drive.
And I'm going to skip the first couple of screens, and I'm going to add in here indicators. And so I want the first one is going to be the 34 EMA. So let's go down to moving average.
So, okay, so how many EMAs can you put on there? Because Dan had asked for 13 and 34.
Yeah, Dan, we decided to go with the 34. Oh, well, I see what you're saying. Well, you can really only test 2. And so here's the EMA. I found that one, but I guess maybe it's under SMA. Sometimes the simple is hard to find. There's the SMA. So SMA, we're going to go 34. Well, 34. No, 34 is the EMA. So let me go back to the EMA. Crap. EMA. 34. And we don't want this in ticks. We want this in price. And we want to display it on the chart as true. And we want, if this crosses above the 89 SMA. 89.
See, this is part of what's great about Ninja Trader too. And I haven't goofed around with a lot of other platforms, but you can do so much conditional stuff in here, like this. That's great.
Yeah, so I've put it in here. If the 34 crosses above the 89, I want to enter a long strategy. So let's do it and see if this, maybe there's maybe a short works on it too. So let's do the 89 SMA crossing down below 89 price true crossing down below the 34 EMA. And I will tell you, I have spent so many hours back testing so many different theories. It's staggering. And I'm working on a couple of ones right now, fleshing through them. Another one that's in the bonds and another one that's in the Russell 2000 TF futures. And one of the TF futures, basically I just stumbled across it by just testing things. So, all right, so 89 crossing below the 34 EMA. Price, display on chart, true. And in this scenario, I want a strategy that's going to go short. Enter short position. Bingo. Do I want any stop loss and profit targets? No, I don't want any stop loss and profit targets at the moment. I just want to see if I've got an edge on some moving averages, and then kind of tweak it from there. So
Exactly.
Oh, I forgot to compile that code. Let me go back and
Oh yeah, you got to do that.
open it back up, compile it, and finish it. Okay, so we have that. So let's do a back test here. And let me pick out my live. Where is my live demo? We said 5-minute chart. And let's first start with equities. So we're going to back test this against my index equity futures, which is NQ, TF, YM. And why don't I have ES in there? Probably because I don't trade the ES. Probably why I don't have it in there. But let me add the ES to that chart. Let me go back over here. Instrument manager. And this is the index ES. All right, it's added. And it's compiled, and there it shows up. So now I'm going to test this against the ES. And I'm looking at the, crap. Got to actually delete. I got the September contract in there. Edit. All right, so I've got to go back over here.
Yeah, I did that the other day too. I couldn't figure out why my charts weren't showing up. And I realized the contracts had all expired.
Yeah, so we roll it. Got to roll the TF, roll the YM, and we're good. Contracts rolled. And there we go. Okay. So I'm going to test this back test. Live demo. We got a 5-minute, and I'm going to back test basically all of 2014. And right now, let's just use a 24-hour session chart. So the entire Globex trading period. And we'll start with exit on close. I'm not going to worry about fill type or slippage, but when you actually get down to trying to find an edge, you want to include the default fill type. You don't want a liberal fill type, and slippage of 1 or 2 ticks. And then there's a place to include commission charges too. Where is the commission?
Right.
Oh, include commission. So when you set up your commission cost, you want to be sure to include commission for the trade. You want to pull out the slippage and pull out the commission in it. But for purposes of this demo, we're just seeing if we can find some kind of edge. So we're going to run this strategy, run this back test. And so what NinjaTrader is doing now is going out and pulling in all the data for the 2014 and all those contracts and running that strategy. And let's see if we got something here. Hey, now this may not show up on the screen because the print is small. So I'm going to zoom in on some levels to see if we can make this a little better or a little tighter to fit in here so people can actually see what's going on. Let me zoom in more. Zoom in. Are you watching the screen, Jeff?
Yeah, yep, I got it up right here.
Can you see the data? Like,
yeah, I can see it fine.
I've zoomed in, so hopefully it's a little larger. All right, so we ran this back test, and in the ES, this particular strategy looks like we would have had a net profit of $6,000 for the year, and Q $8,000 for the year. Losing strategy in the Russell 2000 and $1,000 profit in YM. So I'm just going to immediately exclude the Russell and the YM and just go right to the NQ because it had the best amount of profit, and just focus on what that is. And actually, it looks like my strategy only took long entries, so I must have messed something up in the back test period about the short. So I may go back and look at that in a second. But so here is the back test.
Well, I think you only put in long.
No, I did a short, but I may have forgot to change one little parameter for it to actually work. And I'm going to go to the charts here because this will actually.
Still looks pretty good though.
Well, yeah. So this is essentially, this was on. Let me go to 9-1. So basically, when the 34 crosses above the 89, we're going to get a buy entry, and then it's going to exit on the close of the market, and it looks like it's going to.
Right. So point being behind that is none of this gets held overnight.
Yes. Right. So all right, so here's an example on September 26th. It was buy at the market open because you were above that strategy, and it sold at the close. And this wound up being a very bad loss because, wow, you got hit hard in this big down move on 925. Because remember, we didn't put any stops in place at the moment. We didn't put any profit targets in place. So,
holy nosedive, Batman!
Yes,
that thing fell off a cliff.
It did. So this was a loss. But hey, the profit for the whole entire year made almost $9,000,
right?
Even with this loss. So let's look at a little bit of the detail summary of what's going on here. So during this period, it made $9,000. It took a number of 767 trades for 2014. So now if you figure some commissions just on 767, let's just do 767 times, let's just say round trip $3. You're looking at $2,300 in commissions. So that comes off the 9,000.
And I think $3 might be that might be somewhat liberal, right? I mean, a lot of times you might be looking at like $9.95 a trade.
Well, it depends on what people are trading. I trade
Right,
futures
right.
and, you know, basically $3 round trip essentially is a good rounding. So it just depends on the product you're trading and your broker for all that. So in the futures, I just throw $3 a round trip on that baby. So 767 trades. You know you can wipe off 2,500, so that brings your 9,200 down. You know, to roughly $6,500 profit. But percent winnable. This strategy won 58.8% of the time. So at least you're winning more than you're losing. If I switch over to currency on this strategy, average win is $456 and the average loss is $622. Now that's a pretty high loss rate. You typically want your loss rate to be much lower than your win rate. So some things probably need to be corrected here with some stop losses in here. Right. But unfortunately, but the reason it made money is because the 58%, it had a higher than a flip of that coin that you were talking about earlier, Jeff. At least 58% of the time you won and so that made up for those losers. Now, if you can get these losers under control, you can probably tweak this strategy even further. Now, during this period, the maximum number of losers and winners, you did pretty good. You actually had 9 consecutive winners somewhere during this period in 2014, and the most consecutive losers this strategy had was 3. So another reason is that when you get on a win streak, boy, you got 9 in a row, and when you get on a losing streak, the worst case scenario in 2014 was 3 losses in a row. So that actually is a pretty good combination in there. Another key factor to look at here is maximum time to recovery. It's kind of hard to tell right now since we basically only have 8 months, but essentially is once it makes a new high and it has a little bit of drawdown, what's the maximum time it took to recover to make another new high? In this case, 83 days. So somewhere this year, it took 83 days to get to a new high once it made. We'll go look at that. We'll go look at that chart. So let's go. Actually, I take that back. I was completely not looking at NQ. I was looking at the combined results, and I won NQ. And boy, they look a whole lot better, which explains the strategy more. So this is what happens when you do things live and in drive. Okay, so actually this strategy, the NQ long trade percent profitable was 60.82%. And only took 194 trades, so a whole lot better.
Right. Yeah.
Traded a lot less. I took the whole combined, so that was my fault. So 190.
But the whole combined still wasn't bad.
No, I mean, I guess it wasn't. But it was trading an awful lot.
Right.
But 194, you're talking 194 trades. You're talking $700 commissions. So that's not bad off of your 9,000 that you earn. The profit factor is 1.23. So generally, you want this to at least be 1.2 or better. So that's a good sign. It won 60% of the time. So of the 194 trades, you had 118 winners, 76 losers. I like that as far as a percentage goes. Our bond system that Jeff and I develop only wins 50% of the time. So, hey, when I see anything above 50, it makes me want to at least, hey, maybe got something here. And actually, just because a system can win 98% of the time, but even if you don't control the losers, those 2% losers, it can still be a losing system. So it's all about.
Well, and you're talking about something with more volatility here, though, too.
Yeah. Versus
the bonds. So it's great. I think that's a great percentage.
Right. So now I flipped it to currency, and now here's the average winning trade is $401, and the average losing trade is $505. So still kind of lopsided there. Don't like that at all. I'd like to see, if you get that losing trade down around $200 and the average winning trade at $400. Now I think you start determining we might have some kind of edge if we can get some stops going in place that we need to find a way to limit these losers. If we can limit these losers and keep these winning trades, I think we're on to something. Right now, even though it's a $9,000 profit this year, it's still needs some work. But max consecutive winners, we had 11 in a row at one point. That's great. And the losers, only 3 losers again, so that's contained. And if I want to look at the graph, this is the profit loss equity graph. So this is the starting point in January 2014. The equity curve has been pretty much consistently up. We actually, have rose the whole time. We had a drawdown period in January. We had a drawdown period from March to April. And this is that 89 days where it talked about it took 89 days to recover. So apparently it was about 89 days from this day to this day, meaning you were in the new highs on your equity curve. But in general, you like this equity curve. Now you see how the last month it's gone down, which kind of makes sense because the last month's been a little struggle to the long side. And if you go back and if you look at these to the longs where it didn't do well, I bet you find that this didn't do well when the market wasn't doing well. So another thing to be thinking about on a strategy like this is, hey, maybe I don't want to trade this when I'm looking at a longer time frame that's below some SMAs and EMAs. So there's some things to think about in your backtest. I'm just throwing out ideas that you can take to try to make things work, because this is what you got to do. But now, I want to eliminate my losses. I want to see if I can eliminate periods where I have drawdown, which can be testing something about trading on. I don't want to go long when I've got a longer time frame that may be shorter. So this was a 5-minute chart. So maybe if you look at an hourly chart or a 4-hour chart, and when things are below some certain moving averages, you would not want to necessarily take the long strategy because you're going against the trend. So essentially, this strategy looks like it could possibly work as long as I'm going with the trend. So that's something to keep in mind.
The trend is your friend.
The trend is definitely your friend. So hey, you've got a starting point, and maybe I'll keep the starting point, and maybe we can continue next week working off of this NQ and see what we can do to improve this and continue tweaking this, for the next few weeks and see what happens. I did want to go run this in the bonds just to see what returned, because sometimes, I think the bonds are so much easier to trade than any of the index equity futures. But let's go see if anything positive shows up in the bonds here.
Well, the bonds are going to be fun too, given the whole drop off in QE and the fact that we might see rates go up. That's going to have a huge impact on how the bonds play out.
Oh, let's see here. Wow, look at this. Getting some very interesting results. It looks like ZB, our favorite, made $10,000. Better than the NQ. And I'm looking at this equity curve. This equity curve looks a little bit more stable too. I like that equity curve. Equity curve looks a little better. But UB, contract UB, which is also a 30-year ultra treasury bond.
Right, that's a old, yeah. That's what we talked about a month and a half ago.
Yeah,
right?
It's made 17,000 here. So hey, so why do I even want to go look at NQ when I've got UB starting off the bat saying, hey, that same strategy is worth 17,000 over here. So let's go look at some of the UB statistics and see what we got. All right, UB. So here, it's only 54% of the time profitable, where it was a much higher in Q. But you know what? I don't care. It's making me more net profits, so I don't care so much about the long trade. Must be more controlled on the losses. So let me go down here to the average winning trade and average losing trade. Almost even. So we got $1,900 average winning and $2,200 average losing trade. So again, we can get that loser under control. Ooh, we got maybe we have something here. And only 65 days for max recovery. That's better than 89. So drawdowns were less. And go look at the charts. You can see these entries. Oh, another thing that's pretty cool is just to look at, hey, day a week, because one of the TF strategies I'm working on, I only trade this TF strategy I'm working on. I'm looking at just a 24-hour session chart. Don't limit yourself to the 24-hour session chart. Look at regular trading hours. The TF one I'm looking at, I'm only looking between the hours of session open at 8:30 Central to 11 o'clock Central. Basically 3.5 hours of trading time. And I'm only looking Monday through Thursday. I completely discounted Friday because Fridays were losers. So I'm not trading that particular strategy and simulation on Fridays. So day a week. If I look at this day a week, wow, Thursdays was the biggest winner of this, and Monday and Tuesdays, are losers. But it did well Wednesday, Thursday, Friday. Actually, Friday was $12,000 and Thursday is $8,000. So maybe I only want to trade this strategy on Thursdays and Fridays. Maybe I don't even want to trade it on Monday, Tuesday, and Wednesdays. Of course, we're only looking at a year's worth of data. I want to probably bring in more data and see if this is relevant. But this is just an idea and summary of things that you want to be looking at when you are back testing, just to try to find an edge. You're looking for an edge, and when you can get the edge, you continue to work on that edge until you're ready to move to a forward walk. You want to optimize it and find out if there's better moving averages, because you can optimize, and maybe the 34 and 89 isn't right. Maybe it needs to be the 33 and 90, and that gives you a better win rate and a better overall net profit. And then you want to put it in simulation trading and then eventually go live. But wanted to do a NinjaTrader just back test example, showing you the capabilities of things. If you're trading something, if you're trading any moving averages over a certain period, you certainly want to back test it and see if you have an edge for whatever indicator you're using. It can even be stochastics or MACD or whatever it is. You want to back test your results. If nothing else, you record absolutely every trade that you take in that setup and get about 50 trades in and see if you seem like you may have an edge or not. That's worst case scenario. But
right. Play around with it. Tweak it, do whatever. And figure out what works for you.
So that was just a quick live demo.
And I think that was a great demo, Charlie. Honestly, I think that was very. I enjoyed
just throwing out ideas to people. What things you need to think about. Things you need to consider, like multiple time frames, maybe not going along a strategy when you're not in a trend, and vice versa. So, all right, that concludes that segment. So, does anybody know what ELO is? No, I didn't say hello, I said ELO. Because if you don't know what ELO is, you may have not heard about it yet, but it's a Vermont-based company, and you will probably hear about it. But you heard it first on the Stock Jock and Roll show. And I'm going to present LO because I'm actually in LO. Let me pull it up.
All right, I want to say thanks, Dan, and it's great to be able to do this. Help you guys out. Yeah, help me out. Charlie's great at this stuff. He really is.
Thanks, Dan. And you know what? We're all learning here. We're learning as we do it. So that's why we're here. We're learning. And so thanks a lot. Thanks for coming out tonight and saying hello and providing us one of your moving averages to play with.
Hey, it's a team game. It's all a team game. All right, so Hoover has a question.
Yeah.
Did you see that? You see that, Charlie? You're better off answering that than I am.
Oh, is TC2000 better for futures than it is for equities? Is that what he's asking? Let me see here. Better for futures and NinjaTrader for stocks are both equal. So TC2000 does not include futures, Hoover. It only includes equities. But what is great about TC2000 is the charting capabilities, because you're charting multiple charts. You know, when you're in futures, you got a handful of futures that you probably trade and watch. So you don't need the most robust charting platform. But for equities, because there's thousands and tens of thousands of them that you're tracking or building alerts on, you need a really good platform for that. And TC2000 provides that. Plus, it has just amazing scans that you can use built in. But it is only for equities. NinjaTrader, the platform itself, you can trade both equities and futures. So based on the TC2000 chart, I would take the trade in using NinjaTrader, but it would be based on the TC2000 chart. Let me give you an example of an easy scan. So if I want to see anything that was super active today, which may be a lot, but let's see what this scan pulls back. So while everybody was looking at stocks that, got hit hard today, well, that wasn't necessarily. There were some big winners. Angie's List. Oh, my gosh. It was up 19% today. Who would have thought that? I don't know why it's up 19%, but, it was up 19%. Matter of fact, it was up big time and consolidated down all day. So if you're looking for stocks that are like moving, I can run this quick scan and find out stocks that are moving, and you want to trade stocks that are moving. And so there were a bunch of stocks that actually went up today that you don't really see in your list.
Okay, so while we're at that, first stocks that go up, we can meld that into Ford and GM. We haven't talked about that in a while.
Oh, we don't want to talk about it, but we will. But
why? Why do we not want to talk about it?
Well, my company Ford got the old smack down, big time.
So for anybody out there that's listening, Charlie's a Ford guy. I'm a GM/Chevy guy, right? So we came up with this little deals on wheels competition, to see where we like bought one share way back. When did we do that? It was last September, wasn't it?
Yeah, no. It was February, and it was 10 shares. I'll bring it up, but I want to get to this LO because it's important.
Okay, well, all right. We
Ford,
can do that too.
Ford getting a smackdown in my face, not so important.
You're tap dancing and dodging now.
I am, absolutely. I am moving away from that. So if you're not familiar with LO, get familiar with it, because right now it is starting to blow up. It's getting some traction. And why is it getting some traction? Because it is becoming a Facebook alternative. Yes, a Facebook alternative. Can you believe that? Did you know
What happened to the other Facebook alternative?
Well,
I thought there was somebody that
wasn't that Google Plus?
Yeah, yeah. Well,
I think Google Plus was the first possibly Facebook alternative. Now, there's some things in Google Plus that does quite well, but it hasn't really taken over as far as a Facebook.
There was another one out there though.
Replacement.
It like made a bunch of money, like a ton of money in donations.
Well, here's the thing with Elo that is intriguing for users, and right now, the network is growing by 50,000 new subscribers per hour as we speak. Did you get that? 50,000 new users per hour as we speak. So it's
God, I don't need another social media outlet.
I understand, and I don't either, but we have to be prepared as a trader for what's going on in the world. And so say hello to Elo, and no, I don't mean Elio, the car I'm buying. I mean Elo, the website. It is basically it's an ad-free social network that will not sell anything to advertisers.
So how is this gonna make money? How are they gonna make money?
I knew that was gonna be your question. We went with that with Robinhood, and you know what? I don't care. Everybody asked in the beginning, how is Facebook gonna make money, right? How is Facebook gonna make money? How is Twitter? I don't care if they make money. I just care if I make money.
Well, I know. I'm with you. I'm right there with you.
So I need to know, is this really going to be any impact to Facebook? Is there any potential jeopardy truly involved? I have no idea at this point, but you have to be invited to be a user. It's sort of in beta form. I was able to get myself invited. I can't mention who took care of me, but I got in, and I'm doing a little testing in here to see what's going on. But just remember this.
Oh, wait. Now you're cooler than the other side of the pillow. Now you got somebody that got you in.
I did not say I was cooler. I just said I got somebody that got me in that I can't say who.
This is my Stock Jock and Roll partner, folks. I know nothing about this. But
I can tell you later off the air.
He's gotten in, right?
All right. Well, so Elo, they're based out of Vermont, so they're not in Silicon Valley by any means. But right now, it is something to look out for. I cannot believe that they're getting 50,000 subscribers per hour right now. That is crazy. And the site right now is doubling in size every day or two.
Okay, so where the hell are these people coming from? How are they getting 50,000 people like that at that rate?
They are basically fed up with everything that Facebook has thrown in front of them as far as privacy concerns and advertisements and everything else. And that is the reason why these people are moving from Facebook. So,
see, I understand that. But my question about that, though, is that if I want to continue to be in contact with my friends, if they're not smart enough to move, how does that work?
Yeah, but but same way in the days of Facebook before nobody knew it. Somebody enrolled in 2004 and 2006, and some of your smart people didn't realize there was Facebook until 2010 or 2011. So it's just a matter of time. How many people have you found on Twitter, or Instagram or Google Plus that you're like, oh yeah, they're my Facebook friends, and you can easily find them? It will be easy. You'll be able to find it if somebody moves over to Elo. If Elo ends up being something worth it, people will move. Who knows if it's worth it? But it is all the talk of the social
Right.
space this last week, and I'm telling you, it's been big talk, and it's catching eyes. So when you see some of the people that are discussing it and where it's coming from, we as traders need to at least figure out what it's about and what is going on. But there's definitely a run from Facebook for a certain amount of user who is fed up and tired of the manifesto of Facebook. So,
Why I'm telling you now, it's past Candy Crush. Now there's something like Cookie Crunch or something.
Cookie Monster. Now that would be a good one.
Whatever.
Now here's the
That
thing:
that would be good.
what I need to find out is if at some point I get some user invites, I will send you a user invite, Jeff, and then you can tell everybody, some person that you can't say sent you an invite.
To cook Cookie Monster?
Actually, look, it says invite your friends, generate an invite code. I have 1, 2, 3, 4, 5 of them. 5 invite codes. Let's see.
All right.
here.
Well, all right. Well, send me
so
one.
look, you're gonna get one now.
All right. Where's that go? To my email?
I'm gonna send it to your to your JK account, your Gmail.
I didn't. You know what? I didn't put my damn credentials up there. I'm sitting here flying naked. I got no SJNR, no at JKSTL21.
All right, so use the buttons below, invite your friends. Oh, now somebody else can probably see that invite code and get it before you, so I pulled it off the screen. So I sent it to you. You should get it. There's an invite code that you can use to look at this. Now I got on this website and I created my profile like you recreate, any profile. I haven't figured it out yet, so it's not making sense to me, but I guess probably in 2005 at first Facebook didn't make sense to me either.
No, I would agree with that.
So I have no idea. I think this site is more mobile friendly than it is desktop friendly at the moment. Like I think it's meant to be on your mobile phone. But anyway, you should be getting an invite. So,
I got it, but I can't get the.
So sign up in your off time and see if you can get in and see if you can find me as a friend down there. See if you can figure that part out. But anyway, I want to let everybody know. Google LO. Read some of the news articles. Just Google LO under news of Google, and you're going to see it's getting some publicity. But StockJocknRoll was the first to let you know.
That's right.
Hey, you know that Hong Kong protests that have been going on?
Yes.
I learned something interesting about that. And I don't remember where I heard this. It may have actually come from RPM the other day or something. So during those protests that were going on, Hong Kong had decided, I guess, to ban some things on the internet because too much of the protest pictures and stuff was getting out. So somehow Hong Kong, they banned anything from Instagram and some social sites. I don't know what all got banned, but they were trying to put a squash on getting things out to the public. Of course, we know, like North Korea does that all the time, and even China squashes some things. But
and Google's pulled out of China.
Yeah. So, but the interesting thing, there's actually a very interesting workaround that the people in Hong Kong figured out via an app that's available now. Let me see. I cannot remember this app, but it's an app that you can put on your phone that you don't need internet access in order to communicate with other people or pass pictures. Does that sound freaky?
So wait, how does that work? You don't need internet access. How do you communicate then?
Ha ha ha. Let me see if I can find this. I put King Kong, not Hong Kong. Hong Kong. app. I'm not sure. Hong Kong. Internet block. Censorship. Let's see here. Ah, bingo. Got it. It's called Fire Chat. Fire Chat is an app that you download to your phone, Jeff.
Mm-hmm.
And it basically uses your phone as like a cell tower.
So it's like the gateway.
Yes. So anybody that is and I think I read that it's like having Bluetooth on your phone, like anybody connect to your Bluetooth type of deal. So what it does, it turns your phone into a radio signal essentially. And I think the distance was up to 50 to 250 feet, depending on, like if you're outside on a flat surface, it could be up to 250 feet.
Right.
But what they did is they started encouraging all these people in Hong Kong. They had like 8,000 new registers at FireChat, the app, of these downloads. And so when you got that many people strung across, there's actually a way using these apps that you can communicate without needing the internet. And it almost works like in packets where I'm trying to send you a message, Jeff, on FireChat, and so I send it out.
Right.
It's got to find you. It doesn't know where you are, but what it'll do in order to find you, it's going to find the next person next to me that has the app, send it out from there, and just
it bounces a signal through.
It keeps
everybody
bouncing.
else.
Right. Now, granted, if not a lot of people have this, it's going to take somebody to get within walking distance of you for you to get that message. But it can eventually get there. But if you think about it, what if everybody has a smartphone, downloaded that app? If internet goes down and all of us have the app, I could get a message to you in Atlanta if I do it, because from here, it would probably get to you. But if you're at a gathering, like in Hong Kong for this protest, and everybody is, together in a huge group, what did they say? They had hundreds of thousands of people out there. And if they all have an app, everybody can communicate what's going on. And you could send pictures. Your phone worked just like your phone worked. So that was how that they were getting by a lot of the censorship locally in Hong Kong.
Right.
So anyway, that was pretty interesting. It's Fire Chat if you want to Google it. Anybody out there in the in the world or in the chat room, Fire Chat is the app, and but a very interesting concept that could take hold here in the U.S. at some point, especially like those Ferguson protests that were going on, or any Occupy Wall Street. If government wanted to try to shut it down, these people, the only way they would be now then is to take your phone from you, because you would actually be able to communicate with those around you. But then you can communicate enough around you. They were able to communicate it enough to get it out to somebody who had internet, then to get those pictures and images posted. So, Anyway, it was an interesting concept that I wanted to bring up that was new to me. I didn't know anything about.
That is intriguing. Unless you live in Montana,
well,
then you're pretty much screwed.
Yeah, those 6 people have to get on a horse to go communicate their phone.
the Pony Express and a carrier pigeon are how you communicate with people.
Oh my, oh my. Oh. Well, we only have 20 minutes left. 20 minutes
We
left.
do only have 20 minutes. What else we got to talk about here? I threw some stuff out there.
Well, let's go back and look at that Ford. I'll go back and I'll own up to it, man. Now that we got time, I wanted to get those Ford and GM. I'm going to own up to it because I'm throwing the Ford chart in here.
I guarantee I'm still losing.
Ford has lost like 12% of its stock in the last 3 days.
Would they stop making the F-150 or what the hell happened?
No, that's the only thing keeping them freaking afloat. I think most of the problems happen outside of the United States. I think they're having some international issues selling cars for some reason. It didn't meet expectations outside the U.S. I haven't really paid attention. I just saw the stock just get hammered. So I have the Ford chart up at the moment, and
I gotta pull the screen up again.
well, you're going to see a bunch of blood red the last 3 days on that Ford chart.
What is that Ford chart?
It's holding support, at least here around this 1452 level, 1450. But
Holy crap! That thing. Why did that thing fall off a cliff like that?
something to do with those international numbers. They reported some numbers the other day about, car sales. I think, I don't know. I haven't looked into it. The whole market is getting toasted, so I don't know what really drove this one over anything else that got toasted. But I think it had something related to car sales. I don't think Ford is the only one here. Not sure GM was much better, but we'll look at that in a second. Ford actually took it just took a pee all over the bed. So that contest that you were mentioning, I bought 10 shares back on February 10th at $14.84. And that all looked, pretty good about 2 weeks ago for me.
Oh, I haven't looked at them in a while. They were doing all right. They dropped a little bit.
Well, they had a high around $18. I was actually up over 10% in this trade over a month and a half ago. I am now down 1.68% in this trade.
Was that? And you can't follow all this stuff all the time, obviously. And I haven't. We took that trade just kind of for fun. I'm a GM guy. You're a Ford guy or whatever.
Well,
I haven't followed that real closely.
But
they, holy crap! How did they?
Well, they
nosedived.
It does. But you know what? I don't care. You know why? Because it's still beating the pants off of GM. Let me pull up the GM stock. Now, it hasn't cratered over the last 3 days like Ford has. It's just cratered ever since they've been around as a company. So your shares bought in February, you bought 10 of them at $34.92. Guess what, buddy? You're down 7% in that trade with the close of today. So even though I'm red at down 1.68%, you're down 7%. So I'm still winning, even though we're both losing. Now, I still think by the end of the year, I think we'll both be green on this. I really do. I think we'll both be green on this. But I'm thinking Ford's going to win by the end of the year. So
I don't like you anymore.
I kind of figured that. So yes,
I'm taking this Texas flag off my wall.
So while yes, I've taken a beating in Ford the last few days. It still hasn't been the beating you've taken since February when we bought them. Anyway, the whole plan of this is we're at the end of December. We're going to see who did better, and if anybody's in the money, they got to pay the other person the money, whoever won. But if we're both red, well, we both just lose money. Maybe it wasn't the brightest trade idea to work.
I'm getting killed right now anyway.
That's why we only bought 10 shares of it. But, hey. Well, I think we'll both be green by the end of the year. It's going to turn around, man. I'm only at 1.6%. So after that, this bounces back, I'll be fine. It'll return back to those levels again.
The point is behind this, folks, start buying cars. And if you're going to buy them, Buy GM.
Buy Ford.
Nope.
Oh, let's go to the economic calendar tomorrow. We talked about Friday being the jobs report, which is going to be very important. But do we have anything tomorrow that we need to be concerned about? Let's just take a look. Oh, we have jobless claims, 8:30. Weekly jobless claims tomorrow at 8:30.
Where's my
factory orders at 10 o'clock? And the bonds, we have a 10-year and 30-year note announcement at 11 o'clock Eastern time. And one of our Fed speakers is speaking tomorrow too. Two of them. We got William Dudley speaking at noon Eastern time and Dennis Lockhart speaking at 1. So hey, bonds should continue some fun tomorrow.
Yeah, that should be fun. I don't know where my announcements went. What the hell?
But that looks to be on the calendar tomorrow. Nothing nothing of importance. And Dan's mentioning some POMO tomorrow. Let's take a look. They usually trade between like 9 and 11 on their POMO. Let's see here. Somewhere in that time frame. Tomorrow we have Thursday, October 2nd. We got a little baby POMO. Barely $1 billion. That thing has just dwindled. I remember when we were getting 5 and 6 billion a day. Yet a couple days ago we had a 2 billion POMO. But look at next Tuesday. Only 0.35 billion. It just keeps dwindling and dwindling and dwindling.
Oh yeah, I'll write that one off.
We didn't have any POMO today, but we got a little POMO tomorrow. So maybe they will be buying, saving the market tomorrow for a bounce. Thanks, Dan, for letting us know about the POMO tomorrow.
And thanks, Dan, for hanging out with us tonight. And everybody else who's out there. We still got a baseball game on too, Charlie.
Oh, wow, I forgot about that. Is Pittsburgh winning?
No, they're getting killed.
Great, that's all I needed to hear.
They were, last I saw, they were losing 7-0.
Nice. Sweet. More importantly, we have a big baseball game on Friday night. Our Cardinals are playing the Dodgers, and the two best pitchers in baseball are going head to head.
That's right.
So you know where you're going to find Jeff and I on Friday night, in front of a TV.
Yeah, absolutely.
Is it the, are they in the Lou, or are they out in L.A.?
I believe they're in L.A. I believe they're at Chavez Ravine.
Okay, so Dodger Dogland.
Is that still? Are the Dodgers still in Chavez Ravine? Are they in? Did they get a new stadium a while back?
I don't think they got a new stadium. I think it's still the Great Dodger Ballpark.
Well, if they didn't, they're still in Chavez Ravine then.
So let's see here. Our game is at 6:30 p.m. Central Time. So 7:30 your time there, Jeff. Wainwright versus Kershaw. Wainwright 20-9. Kershaw 21-3. It's gonna be a blast. We'll be tweeting like crazy on Friday night.
Oh, are you kidding me? I'm gonna probably lose some fingers.
And if you don't follow us on Twitter, oh, you should, because we'll entertain you there too. I go by @ProlongWealth. And Jeff, you go by?
JKSTL21. If you guys are, if you're sports fans, basically whatever you follow. Charlie's out there, I'm out there. If there's a Cardinal ball game on, fire it up. Fire it up. We're both out there. Charlie does better with doing the stock stuff than I do because I've got, some other stuff going on. I can't get out there during the day as much, which I don't like, but it's the way it goes.
Well, you can
but
always find me in the all things bonds chat room, although I may be closing that room here shortly because hard to believe there is not much interest, it seems like, in bonds. And boy, are people missing out. You guys are so missing out. That's all.
See, I don't get that. I honestly don't.
It basically,
because I think that opportunity, I think there is such opportunity in the bonds arena, and so many people are missing on that.
It comes down to basically, I think, two things. It's not sexy, and they don't know what even bonds is. All they know, a lot of people, all they know is the ES market. You'll even find people in the ES that won't ever even trade the YMNQ or the Russell 2000, which I think you shouldn't even probably be in the ES. Go to the NQ. NQ is so much better. Even Russell 2000 or YM. Just stay. In my mind, I stay away from ES, but bonds is where it's at, baby.
But the thing is, though, too, even if you're in the equities market, bonds are such a great hedge and such a great backdoor to cover your ass. Essentially,
with
almost
no head fake, like you get in ES.
Right.
Nice trending bonds. And matter of fact, in the ZB contract, one tick is $31.25.
Right, that's the whole thing.
Scalp you out 4 or 5 ticks of that a day.
Look at that. If you exactly.
Try to scalp out 4 or 5 ticks in the ES, 1.5 a day, and what does that bring you home? Like $60?
Right, you can do that in an hour. I mean, you can work for an hour,
but
and make 60.
But I'm in that chat room, and there's a few people. Anthony comes in there every day. Sonny, Steph 139's in there every day. There's a few people that are interested in it, but for the most part, can't get any interest in the bond room. So no reason for me to drive interest. I've given people a month and a half to see if they want to come in and learn bonds. A few that have come in, I think I've taught them some things, and I'll keep working with them on the side, and they get the benefit out of it. But I might stick in there a few more days in the all things bonds to see if anybody peeks in. But I'm tired of being the only one in there and the only one in there giving charts and thoughts. So you may just find me in the room. I still follow the ES. I trade the NQ, so I need to know what the ES is doing. When RPM was on the show last Friday, we said look for that retest in the SPX in 1980 and look to sell that. And so far, that's played out pretty well. So if I don't trade the ES, I need to know what's happening in it. But I can't get bond interest. So if there's not bond interest, that's fine. I don't need others to have interest in it. So anyway, it's
I've got a closing request. We got a few minutes left here. Yeah. But I do have a closing song request before we go. What else do we put out there?
I don't remember. What's anything you see that looks like we can work through quickly? Let's see here. I'm trying to get our video here to up closing video up.
We talked to the Ebola effect on the different stuff. Oh, I had this is something that we can talk this maybe next week. I found that article on Buffett's top 25 for 2014.
Oh yeah.
That's something that's not gonna.
What the heck was that? Nice work, people. Well done.
That's a little bit longer conversation.
Yeah, and we'll have to go through each of those charts to see if did Buffett have any winners. Of course,
Right,
there's still a quarter left to go, I guess, but
right,
we can
right.
take a look now and say after 3 quarters, how's Buffett doing on his 2014 picks?
Right. We talked about
So
Ford and G.
So we can keep that one for next week.
Right. Yeah. We can talk about that next week. We talked a little bit about the Ford GM thing. That's fine. We went through the back testing thing.
I got one. Since I'm cutting you off because we're short of time. I got one here. I forgot about the simple trading model.
Yes.
The simple trading model. We actually had that simple trading model kick in today. And this is an S&P overnight trading model that has been back tested for quite some time, back to 1997, that actually kicked in tonight. And here's the baseline rules. This is what I'm talking about, having simple rules in your trading system. Don't overcomplicate it. Do not overcomplicate it. So the baseline model rules are as follows. 1, SPY closes at a new 20-day low. Did we have that today? Absolutely we did. 2, the close is above the 200-day simple moving average. Did we have that today? Yes. We closed below the 50, but we are still above the 200. So if those 2 rules exist, you do one thing. You go long at the close. So at basically 259, you make a buy in the SPY. And then what do? Tomorrow morning at 8:30 when that baby opens, you sell at the open. Can you get a trading system any more simpler than that? Nope, you can't. And let's take a look and see what those backtest results are. So going back to 1997, when that scenario was into place, taking a $25,000 account, and they deducted $30 for round trip for slippage and commissions. And of course, there's no stops because the market's closed overnight. So you basically are buying SPY at the close and selling it at the open. So there's no stops. But your $25,000 would have made on that $25,000. And why do you need $25,000? That was in order to be able to use the pattern day trader rule so that you can buy and sell in the same day routinely, because you could get more than 2 or 3 in a row of that 20-day low. But anyway, you would have made $7,000 with it. Here is the model. It wins almost 70% of the time, and the average net win was $118. Very good profit factor. So you could have taken that trade and had a 70% edge that tomorrow morning when we open up higher than we closed today. So let's see if that happens tomorrow. And we'll take a look at it next Wednesday if this would have been true. If you would have been able to get that. But that's a simple, very simple trading model. We covered that in less than 5 minutes. So you can always remember that model. SPY closes at a new 20-day low. Buy the close. Sell the next morning open. Simple.
Boom. Yep. I'm rolling through the list here.
So what was your closing song? Because it's time to close.
It is time to close. Where are you at with Robinhood?
I'm number 787 in line, so I haven't improved much from last week, but I did actually get a tweet from Robinhood. Robinhood tweeted me and said I should probably be cleared very shortly. I don't know what shortly means. 1 week, 1 month, but I suspect in the next month I will get cleared for Robinhood 0 commissions.
That will be awesome.
Hey, Frostbite. Good evening. Hey, Hoover. We will we'll check that in the morning to see if we open up positive tomorrow. At least we know statistically since 1997 there's a 70% chance. So that means you have an edge. If you take that trade every time it comes, you have an edge to make money in the market, and that is what you're looking for, is an edge. And if we open up high and we close at the low again, guess what? That would be another 20-day low. So.
Absolutely.
Anyway, so what was the song, Jeff?
Well, I want to throw a shout out. I want to thank Hoover for hanging out. Love Hoover, great guy, always in here. Want to love Frostbite for being here. Basically, who else we have in here? Dan Aruba.
Dan and our boy Spaghetti has been with us since we've been around.
Yeah, Spaghetti's been here forever. He's been here with us for the entire time. He deserves the shout out.
Lock and Profit was in earlier.
Yeah, Lock and Profit was here. Trung, I don't know if Trung's new or not, but awesome. Yeah, you're welcome, Hoover. Dude, you are good people.
Hoover
we
is
definitely
awesome
appreciate
for the Rockstar community.
Yes, absolutely. Hoover's great. I don't know who else we got out there. Here, I don't know. What do you want? What do you feel like? I got a song in mind, but
sure, roll with it. What you got? I'll find it here.
Find George Thorogood, Born to Be Bad.
Okay, George Thorogood and the Destroyers. All right, so that's what we will close with. And Jeff, appreciate you, buddy. Everything that you do. There would not be a show without you coming on here, because nobody would listen to me for 3 hours, because I get very boring and stale. So I can't do a show without you here. It's kind of like the Mike of the sports talk.
You know what though, Charlie? I couldn't do a show without you either.
Well, then we're good together. So we'll keep rolling with it until people are no longer paying attention and tell us to go away.
But you know what? At some point, as I catch up with this stuff, given everything else I got swirling around me, right? At some point, it'll all work out. And yeah.
Well,
folks, I got to tell you right now,
as a consultant, you're either busy or slow, and right now you are a busy man, and that's a good thing.
Well, that's the whole point. That's the whole thing. And doing consulting stuff, yeah, gets a little crazy sometimes. But I couldn't do a show without you either. There's no way. And folks, Charlie's a great friend, a great person, and this is fun.
It is a blast, and
this is fun. This is fun stuff to do.
And we're not professional traders, but we're here to learn. That's it. Simply and foremost, is we want to continue to keep learning.
And to throw this out for everybody out there listening, thank you for hanging out with us. And if you want to contribute anything, go ahead and do that.
All right, man.
It's awesome. This is awesome. Love it.
Tomorrow's Thursday. Go Cardinals on Friday, and I'm sure we'll touch base by Friday. We'll be tweeting away.
I guarantee I'll be tweeting away.
All right. Talk to you later, man.
All right, Charlie. Take care, buddy.
All right. Later.
Was that? Nice work, people. Well done. Very solid work.
Another day, another opportunity to impress everyone.
Well, guys, I think we've all learned a valuable lesson here today.
And another adventure draws to a close.
When I say good, you say bye. Good?
Welcome home. You're listening to the best non-professional advice show on the planet. On your home for overnight low-back session. This is the Stock Jock and Roll Show on daytradingradio.com.
This is your wake-up call, pal. Go to work.